Welcome, everyone, to this episode of the MBE Enterprise Podcast, where we talk about money, business, and entrepreneurship with some of the brightest minds I know. Today, I am joined by investment advisor rep, Josh Darwin. Josh, how are we doing today, man?
I'm doing pretty good. I appreciate you having me on, Matt. I'm excited to talk about some cool things.
Dude, I'm excited too, man. This is the first episode that a lot of them that I've had on so far have been kind of the entrepreneurship side of this, where this one, I think we really get into kind of my passion, as well as yours, which is the finance, investing, money kind of side of things. So I'm pretty excited about that for sure. And Josh, to start us off here, why don't you just tell us a little bit about what you've been up to lately? I know you graduated college recently and have been working. Kind of tell us about that side of things and where you're at in your finance journey with that.
Sure, yeah. So I graduated from NDSU, North Dakota State, last May. I was on the track team there, was in the finance program major. During college, actually, I worked at a independent investment advisory firm in Fargo here. It was just a small firm, me and my boss. For a couple of years, just did assistant type work and research, that type of stuff. And then eventually, I think it was end of my junior year. So junior year, I got my licenses so I could actually manage real money. So I've been doing that for over a year now, almost a year and a half, I think. So it was just small friends, family, people I can find, wasn't much, but learned how to manage money and what that all takes. And now I'm graduated, just been working a little more, and I'm actually going to be changing jobs here soon, but I can't give too much detail on that, but pretty exciting. I got a good offer to work with someone I know very well, so I'm pretty excited. But yeah, just that's where I'm at in the journey right now, just beginning.
You mentioned that kind of licensing process you brought up that you did a couple years ago here. Take us through that. What was that kind of like, studying for those exams? The audience might not be aware. I'm kind of aware of how that goes. Tell us a little bit about that and just kind of any struggles or the journey along the way to get that accomplished, because it's a big accomplishment.
Sure, yeah. So first I did the insurance licensing. That's quite a bit easier. It's tough. You got to study, but I did that over summer and just studied a few hours a day and took a month or two, got the test done, and then took a little break and started on it was a Series 65, so it can make you an investment advisor representative, so you can represent an investment advisory firm, manage money, give advice. And if you ever heard of like the Series 7, Series 66, Series 65, they're all those type of tests, different meanings, but it's kind of all different difficulties. And 65 is, how I understand, it's not the hardest one, but it's hard. And I made the mistake of doing it during probably my hardest semester of school and of track. So I failed it once. First, I failed it by actually 1%. I failed it. So it's, I think, 1 or 2 questions. I probably should have waited till after school to do it, honestly, or during the summer when I had more time, because I was only doing 1, 2, 3 hours a day. And if you're full time, they make you do it like 40, 50 hours a week. It's your only job for about a month or two. So I made the mistake of doing it during school and track, and I actually passed though, so it worked out fine. It was a grind, a lot of studying, a lot of new stuff you never heard of before, but you just gotta grind it out and get it done. And it was a big relief once I finished that. But yeah, it's tough tests.
The Series 7, I feel like, is a popular one. I'm aware there's a bunch of them, like you mentioned, a handful at least. Was there something particular about Series 65 that kind of made you want to lean that way as opposed to some of the other ones you brought up, or was it kind of just a decision you made?
Just how our firm works, and how a lot of the industry is going, it's going towards more advisory rather than broker dealer. If you don't know the difference, advisory is like we manage like funds for people and we charge a fee, where broker dealer is like a fee or a commission on every single trade. So advisor it's more towards the best interest of the client. You can make 1,000 different trades and the fees can be the same, versus broker dealers fee in every trade. So if things are going bad, we want to get out and into a different sector or stock or whatever, we're not punished for that. We have more flexibility. So it's just how our firm works. Is the 65 is the test we needed. So
For sure. Another thing that is kind of a psychological thing to get over here, I would think, is you talk about that gave you the ability to manage other people's money, which for anyone who's never, done that, like that's got to be a pretty big deal in your head, because it's one thing I've always thought anyway. I mean, it's one thing to kind of put your own money somewhere. It's another thing to kind of be in charge of someone else's money and where theirs at. So what's kind of from the, a little bit of the psychological perspective, what's that kind of change been for you going through the past year?
Yeah, it definitely makes you pretty nervous, but it's nice because then, like, I honestly, I care more about them mention their money than mine. I can gamble with mine, I guess, if you want to call it that, and it's not gonna bother me as much. But if it's other people, you have to have the, like, as an advisor, you have to have their best interest in mind. It's just regulation. So, and if a regulator came in and saw all these different crazy trades you're making, whenever you'd probably get your license taken away. But managing money for other people, I mean, a lot of it's just like the basic investing, diversify across different sectors, different size, and just get them a well-rounded portfolio based on whatever their risk they want to be. So, yeah.
Now, when you talk about the diversification aspect, are mutual funds, ETFs, that sort of thing, do they come into play a lot, as opposed to, I think a lot of people think of, when a lot of people treat investing like gambling, incorrectly so, and they'll just go after maybe this, they heard about this stock on the news or saw it on Reddit or social media, and they want to just try and buy it for the massive gains real quick, get rich quick sort of scheme. And obviously those things happen, they exist, but it's kind of getting yourself in the frame of mind of gambling as opposed to investing. So are you guys working with a lot of mutual funds, ETFs? Is that kind of where you deal with clients, or is it more individual stocks? Not that individual stocks is always gambling by any means, because you diversify, but you know where I'm going with that.
Yeah. So pretty much all of it's like ETFs, and most of the industry is going towards more ETF than mutual fund, because usually it's a little more liquid, a little more, well, there's less fees a lot of times too. And it's generally the same thing. I mean, they're all just a basket of stocks, but yeah, it's mainly all going towards ETFs, we've noticed. And they're just easier to deal with, less share classes than if you know how mutual funds work. But yeah, pretty much everyone's going to be mainly ETFs for their whole portfolio, and they're going to be spread across like large growth, large value, mid cap, small cap, all that, and just get well balanced, because you know how diversifying works. Everyone should know how that works. If you put all your stuff and all your eggs in one basket, you're either going to make or break. And we just want to get, honestly, really just the market returns. That's pretty satisfactory for everyone. So.
You brought up one of the big points that I want to touch on here between ETFs and mutual funds, that you're kind of shifting to the ETF strategy, and one of those things being fees, one of those reasons, I should say. Can you speak a little to kind of the importance of that for investors, and not being aware of their investments? Maybe they're not using it at financial advisor perhaps, and they are doing it on their own, and they're not sure, but between two different ETFs, one of them has a 1% fee, and they're like, 1%, that's pretty small, right? It doesn't seem like a lot. Can you speak a little bit to just kind of how those fees could potentially add up down the road for people?
Sure. Yeah. So like a lot of the large cap mutual funds or ETFs, a lot of them are pretty much going to be an S&P or like a NASDAQ, like essentially. Not maybe little differences here and there, but say they're both the exact same fund. One's a mutual fund, one's an ETF, and the mutual fund has a 1.5% fee. The ETF has a 0.25% fee. You got to go and run on the investment calculator online. Just do the difference between $10,000 for 30 years growth at 8% and do it at 11.5%, and you'll see how much of a difference 1 or even like 0.5% on a fee can make. It's big. I can't do the math in my head, but like 0.5% of $1 million is a lot of money.
Yeah,
it gets down to it. So.
Yeah, I think it gets overlooked a lot in investing. People get kind of, I think it definitely is changing. Like you're saying, like there's definitely becoming a shift towards, it obviously started with Vanguard way back in the day, and the whole idea of index funds in the first place. But there's definitely a shift toward more people understanding that those fees, and kind of the silent fees in a way, of how they can really add up across time. Because in the same way that, compound interest is the eighth wonder of the world working for you, it can also be a negative working against you in that same way when those percentages are adding up. So I think that's something that's certainly important. And Josh, moving away maybe from the kind of your professional side of things and more towards kind of just your personal investing for yourself, just to kind of clarify that here.
Mm-hmm.
What are some strategies that I know you're into trading. I personally myself I've dabbled a little bit. I haven't been as big in the world of trading. I think you and me, I don't know that we necessarily like disagree upright, but we have some little differing kind of perspectives on maybe some of that. And I kind of want to get yours today. What's kind of some of the strategies you use trading, maybe the people you've learned from, resources, all that sort of thing, all things trading for us here.
Sure. Yeah. So, I mean, a lot of people start off, they think they can trade, maybe it's like in a strong bull market like 2020 and you get lucky and you make a bunch of money, you think you can trade. That's how a lot of people start, including me. So I started with my own money in 2020. You could throw whatever. You could pick any stock you want, and you probably could have made money in 2020 almost. But a lot of people start like that. They make money, think they can trade, think it's easy, and then a bear market comes around or a correction comes around, you lose like more than you started with or whatever. But that happened to me. It happens to a lot of people. And I remember if you remember the whole GameStop ordeal, I saw my account double in a couple of days, and I saw it go down 50%, 60% in a couple of days within, back and forth. And I remember after that, I kind of just told myself I need to stop trading for a little bit, or thinking I can trade, and I need to actually really learn. Because people have done it. It's pretty rare. You got to be really disciplined, really committed. People have done it. So I told myself I'm going to stop trading, take it easy. I'm going to find who people have done it before and learn from them. So I kind of started off really on Twitter and YouTube. That's the two most important places I've found to learn trading, honestly, because a lot of traders put their stuff on there. Just started with whoever looked up who was ever successful and followed them and followed what they did, and then eventually find their books or their courses. And, it's been 2 years. I've probably been just continually learning, like almost every day. And I'm not a good trader. I couldn't go and do it for a living like some people do, but I feel like I'm years ahead than what I was, and I actually have a pretty good grasp. It's just hard to apply it in real time, and I'm not a super profitable trader or anything, but I'm definitely learning, and people I'm learning from have done it for, one guy specifically has done it since he's probably 30, 40 years, and he's the main guy I learned from. Like, I'm kind of rambling, but that's just how I got into trading. I just told myself I need to learn. I can't just be gambling, pretty much. It's gambling if you don't manage risk and do it the right way, but it's possible. It's just hard.
For sure. Yeah. Who are some of those maybe mentors as far as trading goes that you've followed over the years, found to be pretty consistent, if those listening are interested in kind of getting into it potentially themselves?
Sure. Yeah. So the three main ones I'd say that are still alive and like putting their stuff out, putting content out, is the main one, Jim Ropel. By far him. I learned the most from him by far. I've probably learned more than him than I have in all of college, just trading wise. But he's number one, Jim Ropel. Mark Minervini, he's probably, a lot of people consider him one of the better traders alive right now. He's crazy what he can do. There's a investing championship. It's called the U.S. Investing Championships, and he won it twice, I believe. Back in the 80s, he won it. He's been full-time trading since, as his full income. And he actually did it a couple of years ago in the $1 million plus division, so your account has to be over $1 million. And he did 331% in 1 year just in that division. He killed everyone else in that. So he's a good one to learn from. And then Oliver Kell, that's Kell, Oliver Kell. He also, I found about him from the U.S. Investing Championships in just the normal division. He did 1,000% in 2020 in just 1 year. So he learned from those guys too, kind of. So those are the three guys, the main ones I learned from right now. And all those guys really learned from past guys who learned from past guys who learned from past guys. That's just how it goes, pretty much. Everyone built a little bit on top of each other. And I can show you some resources too in a little bit and some books of the guys they learned from. But those are the three guys right now who have Twitter or YouTube or both that I've learned from.
Without giving away all their secrets or your total strategies, if you had to give kind of a beginner crash course to someone who was totally inexperienced with stock trading, what would be a few like key points or key points of emphasis that you'd want to tell them right off the bat?
Sure. So the number one, pretty much everyone's going to tell you, is to manage risk or don't take losses. You're going to cut your losses quick and small. That's what pretty much everyone's going to tell you if you look around and look at their courses. And next one is just getting the leaders. So if you look at Overwatch stock market, there's always going to be leaders that are leading the market higher. The new innovative companies, right now it's like the NVIDIAs and the Celsiuses and the whoever, new products, the leaders. Those are the two, honestly, like the two main things you really need to know. It's some people have said it as you get rich by hitting home runs and taking small losses. So riding big winners and cutting your losses really quick. Because if you, as Mark Minervini says, it's going to be death by 1,000 cuts if he's going to get them, because he takes small 1, 3, 5, 8% losses every time. It's never more than that. Because you can't lose like much money if you just always take small. Be disciplined, and you need to take 1 or 2 or 3 winners to make up for that. So it's really about staying small in losses and hitting home runs is the way they phrase it.
When you bring up some of those leaders companies, those innovators that you're talking about in their respective industries, is that in large part due to just the volatility that would be going through with the number of trades? Like why is it that they maybe recommend those top ones, would you say?
So I can actually, let me just show you, because the guy who really like made them popular, I guess, in my opinion, or from my research, I guess, was Bill O'Neill. He wrote this book. It's kind of hard to read. How to Make Money in Stocks. It gives like he did research for I don't know how many years, but look at the biggest winners of the stock market over the time and all the similar characteristics they had. And he figured out what's similar about them, and he wrote them all in a book, and it's called CANSLIM. It's CANSLIM, CANSLIM. It's an acronym, and they each mean one thing in an equation to find like the next big winner. But in leaders as meaning like they're gaining the most in price. If that makes sense. They're leading the stock market higher, because that's what you want. If you want stocks that are going higher, that's just the most basic part of it,
For sure. Another thing you've brought up a lot here has been the discipline side of trading, kind of the psychology of it, right? Because I think that you spoke to it a little bit earlier. I think that's why so many people struggle and so many people fail with it ultimately, is because they might might be following a set of specific rules, or guidelines that they're kind of to follow with it. And a lot of times the great ones, like you've talked about, have the ability to just stay disciplined, stay like a robot, you know what I mean? Like just stay disciplined to the point of they won't give in to their natural human instinct or panic or, loss aversion or fear of missing out, all the common acronyms you have.
Yep.
How important would you just say that role of the psychology behind it is? And how have you maybe made gains in overcoming that in the past and also maybe still struggle with today? Could you speak on that a little?
Sure, yeah. I mean, those top guys, the Minervinis, the Ropals, the Cals, the whoever, they wouldn't be there if they didn't have discipline, like ultra discipline. As Minervini says it, he says, don't let it ever be just one time, because just one time turns into more and more and more. It becomes a bad habit. But he'll never like ever take a loss over 5 to 7% or whatever. I don't know what his exact stop is, but he'll never take it over that by choice unless something gaps down, if you're familiar with that term, but overnight or something. But he'll never take a loss. I mean, you can't. It's hard to lose when you never take any big losses, and you're just trying to find the big winners. And they also, like in bad markets, like the last year and a half, 2 years, they were in a lot of cash, just sitting in cash, doing nothing, sitting on your hands. That's like one of the hardest things people do, I think, especially me. Like if you're in front of the screen all day looking at stuff, you wanna trade. It's like a slot machine almost. You're gonna trade if you sit in front of the screen all day, but it's just being able to sit in cash, do nothing, watch, and just be patient. That's because it can take years, like we've seen the last two, to get a bull market again. So just being able to follow those rules very strictly.
Besides those three guys you mentioned, are there any other, like, I know you mentioned books as well. Are there any other like online resources, like websites that you maybe find to be more, in your personal experience, more reliable than other resources or anything like that?
Yeah. So it's kind of like a trading school, I guess. That it's called Traderline. It's Richard Moglen. Him and some of his people that work there, they have interviewed all these traders, that's where I learned my stuff from the interviews. They interview them, how they do their stuff and their techniques, everything, strategy. Um, they have interviews. They have courses on different strategies, like the Bill O'Neill Can Slam. They have a whole course on that and YouTube videos on it. Traderline's honestly probably the biggest, or like, in my opinion, the best for someone starting too. That and Jim Ropel, the first one I mentioned, he has something called the Ropel Report, and he was a Can Slam guy like almost his whole life. He learned under Bill O'Neill for however many years, but he's been doing Can Slam for 20 plus years, and his report he gives out every week is a webinar and a report with 50, 60, 70 pages of just the leading stocks and possible entries. It's not advice. It's not telling you when to buy, but he points you right to the names that are the leaders. So I'd say Traderline number one and Ropel Report number two. Those are the biggest things for me as resources, I guess. And there's Twitter and YouTube too, but those two are my main ones that I've learned a ton from.
Josh, do you have any advice to someone who maybe they would go on a Twitter or a YouTube, like you just mentioned? Like, within all those things, there's obviously people who are good, right? Like, and good at it. There's also a lot of phonies, right? A lot of people who aren't, and they're maybe just trying to sell something, or they're just frankly just giving poor advice. Are there any tips you'd have for people maybe getting into it on how to kind of navigate those waters and find someone that kind of works for them, or, kind of is successful, I guess, as opposed to like falling for someone who maybe isn't so much, or is just trying to sell them something?
Sure, yeah. I mean, kind of what I did, I kind of just searched traders, and right away and look at people. And I came across that U.S. Investing Championships is one of the big things. And it's like an audited competition. It's not fake. You can't fudge the numbers. It's real numbers. And I just look at some of the people who've won in the past or in the recent years and find them on Twitter and follow them. It's about as simple as that. So they have real actual numbers they've traded with, full transparency. It tells like what they returned that year, so it's pretty clear that they're legit. Like this Minervini guy, he gives a lot of his trades on Twitter and stuff, and he's fully transparent in what he does and his returns. And if he's been doing it for 40 years, he's probably knows what he's doing, or 30 years. And same with Ropel. He's managed a hedge fund, I think, for 17 years, his own hedge fund. And the average hedge fund life is like 3 years or something like that. Most of them close shop pretty quick. But if you can manage that, millions of dollars through 15 plus years, pretty sure you're legit, you know what you're doing. So that's how I find them,
Yeah, I had personally never heard that. I'm not huge in the world of trading, but that definitely sounds like a smart route to take. I mean, in general, like go to the best of the best in their discipline, right? And follow them. I think that's a wise choice there. Josh, let's talk automation here.
Sure.
AI, robot, even just programmed bots in general, leave AI out of it for now. Just programmed bots. How do they affect the trading landscape? Do you think, do those people, are they implementing bots? Are they using them a lot? I know I've just heard so much about it, that maybe you could only do it if you have a high powered computer or something that's like going to get your trades in, like, and we're talking about, microseconds here, right?
Yeah.
Like, getting them in time, or having a programmed bot that's kind of working for you all the time. Cause I've certainly done my dabbling in this, not nearly as much as you, but probably more than the average person on kind of looking into this sort of thing. And I just always see those things that come up, and I'm curious how much of a role you think automation is currently playing, maybe the difference between now and the past, and then also kind of what the future might hold.
Sure, yeah. So a number I've heard, actually, I don't know how true it is, but that like 70% of daily trades are automated. That doesn't mean they're all like strategy bots. It could just be a big fund using an algorithm to fill their orders quicker. Because when you're managing hundreds of millions or billions, you can't just put in one order and get it all filled. You got to get it filled across different markets and whatever it be. But I think that's a lot of it. I'm no expert, so I can't verify this, but I know one big thing in like automated trading is these firms will have like the order book. You can see what's coming in, what's coming out, and they'll actually can identify like big orders coming in like nanoseconds and kind of pick them off in a way where they'll get in before them. This big order will get filled, drive the price up like fractions of a penny, and they'll get out. They're just picking out big orders. So like if they take a couple fractions of a penny from me, I don't care. I couldn't care less, I guess. It's not so much a small trader problem, I don't think. It's more of a problem for the big institutions, in my opinion, and from what I've learned. That's what I understand is most of like the automated trading stuff. You can have your automated stuff where you tell it to buy at whatever strategy, whatever you want, and I think anybody can do that. You can find some resources online that make it seem like you can do that if you really want, but it's tough because if your strategy doesn't work and it's a computer trading, it's not going to stop. It's going to, you're going to get melted. So,
Do you have any plans personally yourself to implement any of that sort of like a trading bot, for example? I know you've mentioned it. I've seen you post something maybe similar to that before. It's obviously an area that maybe interests you. Do you have any plans going forward with that at all?
Yeah. So for a while there, I was really committed. I said, I have a couple strategies I want to try. I want to get them linked up to a bot and trade on like a paper account. So it's not real money, but it simulates it. And that's tough because it's a lot of software engineering and coding, and I don't know how to do that much. So I could never really find anyone to help. And I just, I kind of not gave up on it, but I'm kind of doing more now where I plug in factors, whatever, to Python or into Excel, and it'll tell me potential ones to buy. It doesn't tell me when to buy it or what exactly or buy for me, but it gives the one that like passed the factors, I'm kind of working on a big one in Python now with using like ChatGPT to code for me, which is really handy. Before that, I would have no idea. But I'd say my plans, I don't want to fully automate something, but I want to get it where it like kind of does the research for me, if that makes sense. And I don't have to dig into all these companies. It can just kind of tell me the names I want to be in. They're the leaders, as I call it. So not so much fully automated, but partially to save time.
Kind of like an extremely souped up stock screener in a way, right? So for the average person out there, there's a couple screeners that I've personally used in the past. I always like FinViz.
Yep.
I think that's a pretty popular one. I think that's good. And by screeners, we're talking, I only want companies bigger than this, right? Or I only want companies with a PE, ratio smaller than this number. Just things like that. They're obviously all limited in their, well, not all, I guess, but they're limited in their capabilities on what you can do maybe for free or what you have to pay for. But that's kind of what he's talking about there, as far as all those advanced things that you're building that wouldn't be available on just a standard everyday normal screener, likely.
Yes.
Yeah. And I guess one thing I want to go back here with too is, could you give us an idea of maybe like, you don't have to use exact numbers, of course, but like maybe the biggest mistake you made with trading, or kind of the biggest lesson that you've learned in the past, and then maybe kind of your best moment or biggest success sort of thing?
Sure. Yeah. So I kind of gave a little earlier about the GameStop stuff. Saw my account like over double in a couple days and then lose it all in a couple days. And that was just a trading account. I'd say my biggest winner and loser, unfortunately, happened in that order. I won and then I lost, but it was during crypto run of like 2020, 2021. Everyone knew about that. I got actually, when we got sent home from school for COVID, I was just bored researching, looked into crypto a little bit, and I think prices were like Bitcoin was $8,000 then, and Ethereum was like $200. So I threw a few thousand then, just messing around and see what happens. And then a year or two later, it's like Bitcoin's at 59,000 and Ethereum's at like 5,000. So I was up quite a bit of money, and the biggest lesson I learned from that is to take profits when you can. I ended up not taking much profits. I probably made 20% of what I could have made on that. So I was still lucky to get in early enough to make a bunch of money, but that was one of the biggest lessons I learned was, take it when you can, take profits if you're up big, and protect your account, because I don't want to be taking huge drawdowns. If you can build your account fast like that and in crypto or in leaders, and then you avoid drawdowns, and you keep doing it over and over, you're going to be rich. I mean, that's kind of how a lot of these traders and books, that's kind of their strategy, is just avoiding drawdowns and riding the winners up and repeat.
For sure. Yeah. Josh, we've talked a lot about trading here, and there's some other strategies as far as investing goes. I guess investing and trading would be kind of considered a little separate, but there's, growth investing, right? There's value investing. There's contrarian methods where you kind of go against the grain. Dollar cost averaging kind of be considered one in a way. What's kind of your totally just personal, like, order that you would rank those, and how effective they are purely in your own experience? Because obviously there's going to be people out there that think each one of them is the best.
Yeah.
That's obviously how it works.
And, it really just comes down to the person, because like me, I'm going to put growth investing number one. I'm 23, so I have however many years till I retire, versus like my dad or a guy in his 50s and 60s who probably can't afford to take that much risk with growth investing, where value and taking dividends is more beneficial to him. So it's hard to say, but personally for me, growth investing and trading is number one. I think you kind of have to do that now to even retire if you want, unless you're making a high income. But even then, investing your money and getting 8, 10, 12, whatever % a year, you have to do that to retire, in my opinion. You're not going to be able to afford to just save up unless you're making crazy money. But
the silent killer of inflation will get you.
Exactly. Yeah. You can do the math on it. Look it up sometime. Yeah. But personally, growth, I mean, if you would, you're getting in the next Amazons, the next Microsofts, the next Apples, you're always going to find those in growth investing. And a lot of times ETFs are just fine for most, like probably 99% of people. An ETF or a growth ETF is just fine, because they're going to identify the next Amazons and Googles, whatever, NVIDIAs. So yeah, I for me, it's growth investing and trading, number one by far.
I think you spoke to a really good point there, honestly, and I know we touched on it before, but just the fact that ETFs and mutual funds, you want to find the ones with low fees, but they're really like excellent for 99% of people. Like, I think, social media has a way of bringing out it highlights the highest of highs and lowest of lows. And a lot of those you'll see like individual stocks or cryptocurrency, for example. And I don't know enough about crypto to really have like a firm understanding or a firm opinion on it that I would be super confident in. But what I would say is you can't argue that it is newer, right? So it's kind of a little more on that, the growth, the more risk reward volatility aspect of things, as opposed to like a very diversified ETF. And I think you speak to that's good for 99% of people. Like, but you also like need to be doing that. It is extremely important, like you were saying, because otherwise the time value money works against you, not for you. And inflation, is just going to be higher costs of living. Is just going to be eating away at your earnings if you are just saving, because that might have been old school, the idea of putting your money in a savings account that's going to earn you 0.5% a year or something like that, right? Like that, it's not going to work over the long haul. So I think just the importance of investing some of your money and kind of the budgeting that goes with that, it all comes down to discipline too, right? Because it is money that you're not spending immediately, but you got to have that discipline and just put a little bit here, especially if you start early. It doesn't have to be a lot. Like, you give it time to grow and it will snowball exactly how you'd expect it to. At least it has over the course of history, right? So I think there was an investing kind of boom, and it was trendy kind of before COVID, maybe even a little bit, like not after COVID when it crashed, but kind of that recovery post-COVID. I think it became very trendy. And then a lot of people either A, COVID hit and they saw their numbers tank, and or B, they kind of got in on the fear of missing out at the top of that, then the next recovery, and then it dipped more and people got out of it, right? And I think a lot of people looked at it now because of that as like a gambling thing. And I think that's because, like I said, social media will show the biggest sides of things, right? Or the trading side of things that may not necessarily be gambling, but it is higher risk, right? And you have to be really good at it, like you were saying, as opposed to someone who's just trying to get lucky. That probably ain't going to work over the long haul, right? But just kind of that idea of like not being scared away just because of that and still putting your money away, because it is, once again, over the course of history, the most reliable stock market has the highest long-term returns, of any of the asset classes essentially. So basically, I think that was just a really good point you made. And Josh, something I just kind of touched on there was crypto. You brought it up with in 2021 or 2020, kind of that boom of it. Do you have much other recent experience with it? Is that something you're interested in going forward? I'm sure you're keeping an eye on it. Any current plans with that at all?
Yeah, so I mean, it's like the last year or so, it hasn't been like much activity. It's just kind of up and down and flat, hasn't done much, but I'm still in it. I believe in it long term. And I don't know if people who pay attention to it, but there's institutions like BlackRock and Vanguard and State Street who are actually going to be having Bitcoin ETFs soon, which is going to give a lot more access to crypto. Where they've been applying for approvals for ETFs and stuff on that. And Grayscale, who has a closed-end fund, so it doesn't directly track the price of it. They won a lawsuit against the SEC to actually convert it into a ETF that will 100% track the price of it. So getting those as ETFs where you can access it to the stock market through pension funds to investing accounts that aren't related to crypto, I think that's going to open up a lot. But I think it's another new technology that it's probably years away before it's really adopted by a lot of people. It's still a brand new tech and lots of problems. It ended up being a big part of my account in 2020, 2021, just because it grew so much. But I still have a little bit in it because I believe in it long term, and it's just pretty cool technology. You can go down the rabbit hole on that and read about that all day. But I think it'll be important in the future, especially with the support of all these big institutions. What do they know? That we don't know, that they're putting billions of dollars in it. But yeah.
Definitely. Josh, one of the things we kind of wanted to do on this episode was talk about AI a little bit and maybe how you've used it in some of the ways. If you maybe want to at some point share your screen, I know you talked about that, or just kind of maybe give out some of the tips that you've used for how you've used AI, maybe for trading or just for investing in general, how you've gone about that, coding, maybe even.
Sure.
Take it away.
Yeah, sure. I'll share my screen in a second, but like a couple of things that I think the coolest thing I've seen related to crypto, and like it's I can't think of the word, but it's not just going to be like 3D printing where people thought it was going to be big and turned up not being much, or the metaverse like right now. It had such hype a couple of years ago, and now it's just kind of nothing now. It might be in the future, but not a whole lot to talk about it now. I think AI is actually a legit, real deal, gonna change the world. I saw a report from Bank of America, one of their research department. They put out a report on different factors affecting productivity in the economy, and they went back hundreds of years, and they had AI as influential on productivity in the economy as electricity and the internet added on about par with the productivity, or increasing the productivity in the economy. I think JP Morgan did one where they think it can add, I can't remember the exact number. I can't say this is right, but like 30% to GDP by like 2030 or 2040, somewhere in there. It's just going to automate so much of companies' work. It's kind of bad. It might take jobs, but it's going to save tons of money, make us way more efficient, produce way more. Some of the cool things I've heard about it is like for medicine, they're going to be able to see how different stuff reacts together, create new medicines so much quicker because AI can identify that and predict that. Medicine One is, and it can look at your DNA and find what medicines will match your DNA better, so it's less side effects or work better for you. That's one big thing I think can be cool. Content generation. I think people have seen that a lot on TikTok or YouTube, whatever. You can now go on ChatGPT and it'll write you a script for whatever you want to put content out for there. And then there's other websites you can create videos for it. And other websites you can have a voice talk about it, and you don't have to do anything. It just does all your content for you. Finance, it could pretty much replace financial advisors to a point. There's lots of things. You can go down that rabbit hole also. There's a lot of resources online about that. But one of the things I want to show now, I think everyone's heard of it, ChatGPT. Maybe you don't know about it, maybe you use it a lot, but let's see here. I can share my screen and kind of show just a couple of things I think are cool.
ChatGPT should be a tool that's taught in every school. Like the amount of automation and just the increase in efficiency that I've seen just in my personal life with using that and implementing it correctly is absurd. And I'm sure you'll explain some of those things.
Yeah. And one other thing too, I want to point out, Jim Ropel, the guy I talked about, who I learned a lot from, I think the good point he said was Ben Franklin didn't put a key on a kite up in the air, discover electricity, and that was the end of it. Like, it's our whole world today. And this is just the very, very, very beginning of AI. So I think, in my opinion, that's going to be the internet of our lives, or our parents had the internet, or, whatever it be. I think the AI is going to be our big thing of our generation. But, for example, here, this is ChatGPT 4. This is the paid version. There's a free version. You can get 3.5, but I get the paid version because I use it so much for coding, everything. I'll just say I want to learn how to do a little trading indicator on TradingView, which is it's a platform you can trade on. Let's just say I want to create my own indicator on, let's say, create a Pine script. Pine script is TradingView's coding language. Indicator for when price is above 50-day moving average. It's green. So I got bad grammar. Red when price is below. Oops.
That's the beauty of the AI, though, right? It'll still understand what you're saying, even if it's not proper. That's why it's just crazy. It's crazy, its current abilities. You mentioned you have GPT-4 too, before you go over what it makes. Have you noticed that is definitely worth it, would you say? Because I use GPT quite a bit. I haven't pulled the trigger on GPT-4, but I just about did once.
Yeah, I'd say so, definitely. Especially for coding, like I did. The 3.5 or the free version, it's good, but it's really buggy, not quite as powerful, and the code works sometimes it doesn't. But 3.4, it's worked like a lot more, and it actually has new features where it can search the internet now with Bing. Before it was just limited to everything before 2021. Now it actually can search the internet and get real time stuff, and I think it's definitely worth the money if you use it quite a bit, but. So I copied this. I did this before just to make sure it was working, but let's see. I gotta change screens here. I'll put it in the TradingView and just show you. So say I have no idea how to code. I want to make my own indicator on. Let's see. I gotta just change screens here.
Yeah, because that right there, what you did, that wasn't any coding at all. Like you just typed in exactly how to do it, so you wouldn't have needed to know that going forward.
Yeah, you don't need to know how to code at all, pretty much, and it does it all for you. So this is just NVIDIA, it's just a chart. I already copy and pasted it down here earlier just to show you. I save it, and then you just click Add to Chart. And this is what it does. This is a very simple one too. You could do this on your own if you really wanted, but it does exactly what I said. When price is above, the 50-day is green. When it's below, the 50-day is red. Just a simple indicator, but without knowing how to code, it did it all for me in 30 seconds or so. I use it a lot for TradingView. This is what TradingView is. It's a platform for charts and stuff and indicators, and people can create their own indicators and release them. People can use them. I think it's pretty cool. But you can use this thing, Pine Editor, down here where you can actually like create your own indicators or a strategy, which it'll back test for you. I can do all that. It's pretty cool, but you can get some pretty advanced indicators that GPT will make for you and put on here. That's just one example I use, like on TradingView. It's really cool, I think. Another one you could do, say you're a content creator. Let's just say, I want to start a podcast. I'm going to say,
nice.
Yeah, I'm going to say, Josh wants to start a podcast. What are the first steps? Maybe it might be. Oh, sorry, I forgot. I'm not sharing my.
Oh, you're good. You're good.
GPT screen. I share that.
I was just in love with the lines and the data on the trading screen. Not gonna lie.
Good. Yeah, it's mesmerizing. All right, so I typed Josh wants to start a podcast, and then I said, what are the first steps? And it lays out a whole guideline here for you of what to do first. And it'll give these, and then you'll say, okay, I have my topic. It's business, like you do, business, entrepreneurship, everything. I've done my research, found people I want to talk to. Name and branding. Say I don't know what I want to name it. I'll say, what are name ideas if I'll just say if Josh, so it knows my name, is talking about business and let's just say trading, just because we've been talking about that. And it'll give me name ideas just to name it. It's that's simple, but say, I kind of like, I don't like one, I don't like two. I'll say, I like four, say, but it's not exactly what I'm looking for. Give more options like number 4. Say, okay, so I like trade tactics with Josh. I like that name, just for example. Say, 3 is my new podcast name. Let's say, and then I'll go back to the top, whatever. I'll say, okay, I did my naming and branding and that stuff. I say, equipment and software. Say, I don't have much. I'll say, let's move to step 4. You can just talk to it like a person and, it's back. Say, okay, I need a microphone, it's kind of slow just because internet's kind of bad. And I live with 5 guys, so our internet's sometimes slow.
Well, with the new Bing feature you're talking about too, I mean, you could probably ask it just like, what are the best, microphones, right? Like, and it'll, now that it's real time, that's the big advantage, I think, with 4 versus 3.5.
Big time. Yep. But yeah, you get the idea. You could do this in depth as you want, or you can do it, whatever, simple as you want. Let's just say, and I think the cool thing it also does, one of the good features, it can explain really complex topics in simple terms, or as simple as you want it, or, So let's say, I don't know what acoustic treatment is. I'll say, explain acoustic. Did I spell that right? Acoustic treatment in simple terms. I definitely spelled that wrong, but it'll know. And it'll explain it in simple terms, just a topic. So I don't know what it is. So it's like I'd say it's like pretty much a virtual assistant, but
yeah,
times 1,000.
Yeah, honestly, like it's all, the thing with this is it's only limited to the inputs that you'll give it as the human being. Like if as creative as you can get with it, and human beings have proven to be extremely creative. It's only limited to what you can think of it and what you can tell it to do. That's what's crazy.
Yep. The thing I've seen about it is like computers are obviously excellent with numbers and calculating and everything like that, and humans are dumb with that. But then on the other side, humans are super creative and computers are the opposite. So you can combine these two and I don't know. It really interests me in the future because I think it's going to change like everything we do almost.
Well, and you talked about it potentially getting, displacing jobs. Job displacement is obviously a huge worry of it. And I think the biggest way to, mitigate that on a personal level is to understand it and know how to use it, at least so you can start implementing it yourself, because if it's not you, it's going to be the person next to you, and they're going to learn how to do it, and they're going to become 30 times more efficient, literally.
Yep.
By using it and implementing it. So yeah, it's honestly, it's crazy. It's crazy times. I like what you said about it being the internet, of our time, because it really probably is this explosion. People thought it was going to be crypto. People thought it was going to be NFTs. People thought it was going to be the metaverse. But I think I agree with you. Like AI is definitely, there could be other ones too, but AI is certainly here to stay.
Yeah. And this is just the beginning. I mean, this is like one of the first really products to consumers that you can use, as far as I know. And think of the internet, and I guess we weren't around in like 1990s, but think of the internet in the 90s and what it's gone to today. I mean, you could have had a business in the 80s, 70s without internet. If you don't have a business with internet now, it's pretty hard to compete.
For sure.
I think it's the next kind of same thing. But Jim, I've talked about Jim Ropel a bunch. He's big in AI. If you ever want to learn about, like, he has a ton of content in AI and AI stocks to invest in, and he's big into that. I've learned a lot from him on AI. But
Josh, if you want to hop off the screen share real quick, I got one last question for you here. And that question I have for you at the end here is in a couple minutes or less, what's kind of been the most influential book for you? Not only trading, but just kind of maybe mindset as a whole. It's been the most influential on your life as a person.
Sure. So I'll give two. One's trading, one's not trading. Trading, easily, How to Make Money in Stocks. It's like $10-15, Amazon, wherever. If you want to trade, get it. It's like a playbook, pretty much. Textbook on trading. It's really cool. That's my favorite book, trading wise. I've learned a ton. Non-trading, I'd have to say probably 48 Laws of Power. That's a good one. It's a kind of a basic answer, but I like that book a lot. I like history. There's a ton of history lessons in that and how the laws apply. I think that one's very interesting. Yeah, I'd say those two, honestly. Those are the two biggest, but I'm not huge on books. I learn a lot from like just catching golden nuggets from Twitter or YouTube, whatever. That's where I learn a lot of my stuff from, is maybe people give snippets of books, and that's where I learn a lot of the main things, I guess, my most important things I've learned. But yeah.
Definitely. Yeah, I think we've touched on it. Twitter, YouTube, any of those sort of things, they can be extremely useful. They can be extremely distracting, but if you're able to stay disciplined with it, and they can be extremely useful for learning those, even just, quick tidbits, golden nuggets, like you said, from books that will give you the insights into maybe the most important things, most revolutionary aspects that people have found from them. And then also, but I do think there's a time and a place for, ingesting the entire book. And I think 48 Laws of Power, I think you might be the second person that said that. So not extremely common, but I actually haven't read that one. So that'll probably be one that I add to the list down the road. Yep. And we'll pick up and give her a read. So Josh, I appreciate you coming on the podcast today. I really enjoyed it. I love talking to you about trading, investing. I think we have similar aspirations and goals, and regarding that, and I think it's fun. So yeah, I appreciate you coming on, man.
Yeah, thanks, Matt. Thanks everyone for listening to me ramble for an hour, but I hope you learned some stuff, and yeah, I hope you enjoyed it. Thanks, Matt.